on the market. Chris Conway from the Australian Stock Report joins us now live from our Melbourne studio. Chris, great to have you with us today. Look, let's talk a little bit more broadly about the market. Yes, we saw that big tech-led sell-off on Wall Street overnight. We were perhaps anticipating for some pretty hefty losses today. All in all, it seems like the Aussie market is holding up very, very well.
Good afternoon, Leanne. Yes, I would have to certainly agree with you. The market has held up very well. Obviously, we've rallied off that early low point, and as you were saying just then, just a handful of points in positive territory. So really clawed back a lot of ground. It's very nice to see. I was lamenting this over the last couple of weeks, that it seemed like the Aussie market had been very US-centric, and look, we all understand the reasons for that. Of course, we had the Fed decision in there as well, so all eyes were on the US. And then there was some ructions out of the tech sector, and obviously Trump and his trade wars and the ongoing spat there. But it's nice to see the Aussie market. It might only be early days, but it's nice to see the Aussie market sort of decoupling from that US-centric focus and hopefully focusing on more company-level aspects locally rather than just following blindly what's been happening in the US. Again, it's very early. We've only seen the market rally back today in light of what were very weak leads from Wall Street, but it's the latest piece of evidence suggesting that, maybe we are starting to decouple, and as I said, we won't just take the leads given to us.
We talk about those factors at play there, the tech-led route and obviously those trade wars, as you point out. There's no denying that volatility has returned, and that's really been the talk for the majority of the year, and the fact that volatility will continue for the rest of the year. In that kind of environment with this higher volatility, are you taking risk off the table here, or are you using these pullbacks, say, as opportunities or a buy the dip type scenario?
I think the current scenario is certainly still a buy the dip scenario. I mean, look, I'm a trader, Leanne, so it's odd for me to be talking about these sorts of things, but I peel it back to the fundamentals, and I don't often do this because I like to look at momentum and see what's moving from a day-to-day basis. But when you peel back the fundamentals, nothing really has changed, and I think the scenario we find ourselves in at the moment, where we have had a bit of a pullback, is more a product of what has come previously. So I don't think it's a stretch to say the period that we saw last year, particularly in the US and even locally where our market was moving sideways for the best part of 20 or 25 weeks, they weren't normal periods in the market. So what looks like volatility now, of course it is volatility, but it looks like extreme volatility compared to what we've seen, as I said, over the last 12 to 18 months, although those periods weren't normal. So really all we're doing is returning to normalcy, and in that situation, as I said, you pivot back to the fundamentals, you look at what's going on in the US, the economy is strong. We're still expecting around 10% earnings per share growth this quarter and about 18 or 19% for the year. The economy is good. Locally, the economy is good. So when you peel away from the noise, and that's what it has been lately, noise, and you look at the fundamentals, things still look good, and that's how it leads me to that sort of buy the dip conclusion that I've drawn.
Yeah, so if that is the case and things still do look good, as you say, the underlying fundamentals, I suppose it does get you thinking about cheaper valuations at the moment. With that in mind, where would you be looking? Sectors, companies, what are you considering at the moment?
So one thing, like live as I'm talking to you right now, is I've been running the ruler over the banks again. Look, I know it's a low growth environment, and of course there's the Royal Commission, and we're at, the sort of have been over the past couple of weeks, the flashpoint of the Royal Commission, where, it was all new news, and some of the things that the banks had been doing were pretty shocking, and there was a lot of negative sentiment. As I said, still a low growth environment for the banks. But the banks still have a fair bit of fat that they can trim, and they can really control their deposit funding environment, which should allow them to at least maintain the profits that they've been able to maintain for some while. It's when bad and doubtful debts start to turn that there could be a problem. But again, we've all been talking about that for so long, and it hasn't happened yet. So you just play it out that will continue for a while, where those bad debts won't turn. So it's the banks, it's about how harshly they've been sold off. So just looking at something like ANZ, over the past year, it's down about 20%. I think you said in the last quarter, they've been hit particularly hard. In the last half year, at least, they're down a further another 10%. So they have been smashed quite badly, and we all know that once they get down to a certain level, that dividend support kicks in.
What about, well, just on that, the sustainability, I suppose, of their dividends? Because that's come into question, certainly, with these headwinds at play and even the slowdown in the housing market, how that's going to impact their bottom line and so forth. So the question about their dividends has come up a lot, special dividends and even buybacks. Do you think that they will continue to be able to return that capital to shareholders?
I would think so, and certainly at least in the term that I'm likely to be holding any one of these positions, Leanne. Again, I'm not buying them planning to hold them for a year. I'm buying them planning to squeeze a dollar or two out of them and take 5 or 10% and then move to the sidelines again. So it's not that I think fundamentally these dividends are sustainable, but I mean, look, certainly something again like ANZ. ANZ is my preferred of the four. They've obviously been selling a lot of underperforming divisions off recently and have built a bit of a war chest. They're well over APRA requirements in terms of funding, so they can return some capital to shareholders. But again, for me, more as a trade, it's because, as I said, they have been sold off. I think oversold is the bottom line of why I'd be sort of happy to buy them now. Yeah.
All right, excellent. Look, on the flip side, we're watching Santos, a huge surge for those shares today, up about 18% or so after receiving that $6.50 a share offer from Harbour Energy. And obviously, this is the fourth time now that they've received this offer since August. It seems to be pretty compelling for Santos shareholders. What did you make of it? And do you think it is one that potentially Santos won't be able to refuse this time around?
I certainly think that we're getting much, much closer to that point, Leanne. It was only in November that they rejected, I think it was a $4.55 per share bid, saying that it was inadequate. And this time around, the narrative, at least from the statement, certainly has changed. The company has formed a committee. They're looking more closely at this, and they've said that engaging would be beneficial to shareholders. So certainly the narrative from within the company has changed. You know, there's obviously some speculation there that the deal won't go ahead. It was a 28% premium to last week's close. Stock is only up about 17% today, had been a little bit higher, but obviously that's a bit of a discount to what the offer is. So there's some speculation. There must be some people out there in the market that are thinking maybe this bid doesn't get through. And then I'm sure there's some on the other side of the equation saying we're hoping for a little bit more. But yes, in answer to your direct question, I certainly think this gets much closer to the mark and is much more likely to go ahead than previous offers.
And look, with some of that uncertainty still lingering around, I suppose, still under that $6 mark right now, there is, well, obviously there's a chance that it won't go through, but there's also a chance that there could be some other compelling offers emerging. Would you be holding out potentially for that to happen, or would you be selling into this strength perhaps at just under $6? From a trading perspective, what would you be doing with the shares?
Oh, geez, that's a real tough one, Leanne. I mean, look, for me, it's a 50-50 proposition, and I say that because I don't own the stock and I didn't own going into it. I guess, again, put it in perspective of where it's come from. I think it was only in about June last year the stock was sub $3. So if you've held it since then and you're still holding it now, I would be inclined, just because I like taking risk, to continue to hold the stock and maybe hold out for a better bid. But again, that's not personal advice. That's just the way I would be likely to play it if I was indeed in the situation of having held it currently.
Yeah, sure. In terms of the other energy plays, just very quickly, we'll wrap it up in a minute, but there's obviously been now a couple of deals in the energy space. We've got this offer for Santos. We've had recent bids in AWE. Do you think some other energy companies here in Australia could be targets? And are there any that you're sort of keeping a close watch out for in that case?
No, there's none that I have an eye on specifically, Anne, but I think, you know, the energy market it's a live market at the moment. Even on the other side, BHP looking to divest their $10 billion worth of shale assets. I think it was Shell and someone else tying up with them, poking around at the moment. So, yeah, we're off the bottom, obviously, in terms of energy prices. And I think, you know, I'm certainly in the camp that I think energy prices, or at least oil prices, go higher. So I think there'll be a lot of players out there thinking, yeah, you know, now's the time to be making deals if we want to pursue them. So, as I said, nothing that I'm looking at, but I wouldn't be surprised to see more movement in the space.
All right, well, something to be mindful of for sure. Chris Conway, it's been a pleasure. We appreciate your analysis. Thank you so much.
Thanks, Leanne. Cheers.
That's Chris Conway from the Australian Stock Report joining us there with all